What is up, everyone? Happy Monday evening. I finally have a moment to catch my breath here and make a little educational video. So instead of recording a video, I'm not a big script guy. I don't know how you guys are. Not a big script guy personally. So this is just off the cuff. That's the way I talk best. So here goes. This is what we're going to do. I want to talk about the first hour of the market. I want to talk about the initial balance, the first 60 minutes of the market, and how important it is, how powerful it can be because of some of the statistics around it. Let me go ahead and make this bigger. Boom. There we are. I'll zoom in a little bit here so we can see it. Okay. This is edgeful.com. For those of you that know, I work with them. I use their stuff. I've built a big piece of my strategy around the data here. So that's what I'm going to go through is some of the data with this. Also, if you have any questions, for one, throw them in the chat. I'll be happy to answer anything during this live stream. Don't know how long I'm going to go. This is kind of just off the cuff. I just literally finally, you guys know how crazy the market's been. This is the first time I've had a chance to breathe in, I don't know, 2-3 weeks, it feels like. But definitely wanted to get some stuff out there. It's been a while since I've made any educational videos or gone over anything. So I think this is a good time to do it. Better than never, right? All right, so we're gonna jump into it. So obviously, first things first, what is the IB, the initial balance? It's the first 60 minutes of the market. Here I am on Edgeful, and if you do have any questions, they do have explainer videos here. There's chart explainer down here. So let's hit this first. So you have break of the IB high, you see the IB range. So you see the first hour of the market drawn here, and then you see it breaking up to the upside. A double break would actually look like this, where you break the high and the low. But we'll go over how common some of these things are. If you're curious about how this works, jump on here. You have full videos that explain this to you, as well as some visuals here. I'm going to try to do a good job of it on this video as well, so that hopefully you gain something out of this. And let's talk about it a little bit. So let me just throw a chart up first. This is from today. This is QQQ today. And what I'm going to turn off all my indicators except for this one right here, which is the IB initial balance breakout from Edgeful. It goes with other reports, makes my life easier. You don't have to have this, by the way. If you're an IB trader, if you want to go in, if you want to draw your initial balance on here every day, that's no problem. I like it just automatically being on here. I don't have to measure it out. Saves me a lot of time. And as we know in trading, time can be money a lot of times. So but here's what I'm using. All the Edgeful indicators are included with the Edgeful subscription, with the package to them. But regardless of whether you have that or not, this is how I go through and this is how I do it. So here is my IB indicator. You can see I have these mid-levels of retracement on. I'm going to go through that here in a moment as well. You can see the time is set to the first hour of the market. So I use a 30-minute orb that I look at a lot. And then I've really, really been leaning on this IB a lot because of the statistics behind it. They're so powerful. And let's talk about it. So here's today's first hour. You can see it's highlighted in green here. This is the first hour of the market. And you can see the high up here where the green line is. And you can see the low down here where the red line is. And then this right here is going to be your 50% retracement. This is 25. This is 75. Those are automatically on here. Once again, you could absolutely go in here and just draw them yourself if you wanted to. If you wanted to go in here and draw, hey, there's my IB high. You see I've got drawings from this morning still on here. Here is my IB low, which happened to be at a very key spot. I'm going to go over this because this was a trade today that played out, but you can draw it yourself if you want. Once again, I prefer to just have the indicator on here. Let me turn that drawing back off. That way you can see it clearly. Okay, so first hour of the market. So whether you trade in that first hour or not, this I think is super helpful. Sometimes you can get into this trade before this IB sets because you can look at some stuff. But first things first, let's look at the basic data on initial balance. So first I'm on NQ here. I'll go over NQ. I'll show QQQ and SPY because they're all very important. I trade mostly NQ and ES based off of QQQ and SPY's charts. So here we go. Here we're on NQ first. The first thing that you notice is this strong statistic, 84% of the time. So I'm using the last 6 months of data. This is, since it's on futures, I have it set to just the New York session, so just our normal cash, RTH session. And what is this data telling me? This data is telling me in the first 60 minutes, we set that IB, that initial balance. It's telling me that we're going to break one side 84% of the time. That's a strong statistic. We're going to break two sides just 13% of the time, and staying in between is less than 3%. So 2.38%. That means when I'm looking at this, I'm saying, okay, if we're in this, go back to the chart here. If we are right here, boom, this is in our first hour. So I've gone back, I've hit the replay button here. As this is playing out, there's my IB getting set. If I pause here, at this point of the day, this is right at 10:30 Eastern time. I know right now, this area right here, there is less than a 3% chance that we stay in this for the rest of the day, right? Less than a 3% chance. So that's telling me there's a 97% chance that we're either going to break here or we're going to break here. One way or the other. 97% chance. That is a high odds. You're not going to find that high of a probability on almost anything in the market, to be honest. So that's the first point here, is we're going to break one side or the other. Let me jump over before I get any further in depth, and let's look at QQQ. These stats should be very similar, and you see they are very similar stats. A little bit more volatile on NQ, but it's basically the same numbers. 84% of the time we're going to break at least one side. And if you add these two up together and you say, okay, what is my chance of not breaking? It's 2.5%. We'll round up. So that's a 97.5% chance that you're going to break one side or the other. Okay. And what do they look like for SPY? Let's go to SPY. So breaking one side or the other is actually the same, 2.46%. So there's only, once again, less than a 3% chance that you're going to stay in the first hour of the market. Let me go to the SPY chart to show you guys what this looks like. Here is today's action. Once again, right here. Our initial balance is set right here. So this area here down to here, we're going to break out of that 97% of the time. You can see we immediately did today on SPY, right here on this candle. Immediately broke out. Broke down, I guess should be the correct term here. So SPY, same statistics here. 75% of the time you're going to break at least one side. That means 75% of the time you're going to break here or here. And then once you break that one side, then the odds definitely change, because you're looking at, on SPY, there's just a 22% chance that I'm going to double break. That means I'm going to break both sides. Back on QQQ, that was even smaller. I think it was like 13% or 14% or something like that. Let's pull up the numbers, 13.11%. So if we go back to QQQ, once again, when I'm looking at this, and let's step by step, let's talk about this. So as this is forming in the morning, I see this is set here. And as we're right here at the end of the first hour, we are sitting right here, and we haven't broken either side. We haven't broken this side. We haven't broken this side. So what I'm looking for is one of these two sides to break, obviously. And then once that one side breaks, that definitely changes my perspective for the rest of the day. If I see we break one side, I know that my odds of breaking the other side are so small, I don't want to play in that direction unless I'm only playing back towards the middle or a counter trend scalp. So for example, today we broke right here. We broke through that IB low. If at any point you decided to get long, a move back to the high, which today obviously we just went down, we just trended down. But since we broke this probability of this move, this V-shaped recovery or this reversal to break the high, to come up here at any point during the day today was less than a 14% chance. It was a 13% chance of that happening. So because of that, I'm not looking, once we break one side, I'm not looking for that reversal. It's the same way if we had a bullish day, right? If this broke the upside in the morning, if we broke this after this first hour, so you see the first hour ends here. If we broke here and reversed down, I'm looking at targets here. I'm looking at targets in the midpoint, maybe here, and I've got statistics to back that up because I know it's a 13% chance to reverse this entire thing. So once you break one side of this initial balance, a 13% chance on QQQ, just a 22% chance on SPY. That means I need to tamper any expectations. So if I'm trading against that, I need to know, hey, I should not be looking for any targets up here. I should be trimming out into this right here because I want high probability trades, high probability setups, right? That's the entire idea. All right, so it's the same thing on SPY, same thing as everything. All right, so that's kind of the initial gist of initial balance, right? That's the main piece of initial balance. Now, there's a couple other things that we can look at here. If you're on Edgeful, you can go over here and you see the standard. We can look at weekday, we can look at size, performance, all kinds of stuff. So the first thing that I want to look at is retracement. Let's go to retracement first. So this is what, and you see level one, you see this 25%, this 50%, and the 75%. So what this is measuring how often you come back that far into the IB after you break it. So for example, today we had a breakdown by retracement. So I'm looking for those type of levels. That's just percentage based, right? So for example, here on QQQ, our IB was set. Here's the high, here's the low, that green line and the red line. This is the midpoint of that. This would be 50%, and this would be 25. This would be 75 since we broke down here. Any retracement would be that. So for example, if we broke here and we bounced, I'm looking, this would be a major target, and this would be a major target. If I had some kind of confluence to get long down here at some point today, that's what I would have looked for. And if you look, we never even got back to there today. It was a rough day, right? I could probably find another example. Yeah, we can go with Thursday's session. So we broke the low, and just look at how this plays out. So here's your IB high, here's your IB low, here's the end of the first hour. We broke downside, right? We broke downside. We retraced. We had support here, 441. Some people got long. I think I actually got long. But look, here is that 25% of the IB, and look where we have these two upper wicks right here. You see? Look at that, and they rejected. And then look, there's the midpoint. You see how many reactions? Look here, look here, look here. This was obviously a key spot, was the midpoint. And then look where the other place it rejected, up here at the 75%. Now, whether or not you subscribe to that, we can look at the data around that, and we can see, okay, the initial balance broke down. So the break was to the downside. That means 60% of the time, we are going to make it back into that 25% level. 50% of the time, we're going to come back. 37% of the time, we're going to come back to the midpoint. And just 15% of the time, we're going to make it to the 75. And then if you remember the stats from earlier, double break was 13%. So what does that look like on the chart? Once we broke this right here, your statistics were high to get back to here. They were 37 to get back to here, and just 15 to get back to here, and then there were 13 to get to here, right? That's your statistics. So if you got in a trade here, you know that you have a 60% chance. Now you only have a 37% chance, 15, and then 13 once you've gone this far. So the further you go, once you've broken the low, you need to be trimming. I would not want to be buying a whole lot of dips here, knowing, so like as this played out throughout the day, right? We've got to the midpoint. Okay, look right here. Maybe you get low. You say, okay, we came back down. We held IB low. So, obviously here's your IB. Here's your IB low. We held here. Maybe I get long here, but I need to target here and be out of most of my position. Maybe some runners to here, but I don't want to be dip buying here. And I really don't want to be, I don't want to buy anything really higher than this level right here, because I know that there's just a 15% chance of getting to this level and just a 13% chance of getting to this level. So for me, once this IB breaks to the downside, I'm not looking to do anything other than play some bounces and get out, right? Scalp type of mode. If anything, I would be looking to short in this area or this area. And definitely if we got up here, I'm looking to short because I know it's just a 13% chance that we're even at this spot. So once again, if you look, any time that you got to these lower probabilities, you could have taken a short and gotten a nice trade-off because that's just what the data tells us, right? Even if you break the upside first, if you break the top first, it's 58%, 31%, and 15. So this is saying if you break that top side, coming back to the middle only happens 31% of the time. Probably not something I want to look for in a trade. That's definitely a very strong data point. Let's see. Buy rejection. Here's another piece, and this is kind of how today played out a little bit. Okay. What this report is telling me is which side of the IB formed first and what can I do with that information, right? So let's think about it this way. If the IB low forms first, I know I have a high chance of breaking the high. If the IB high forms first, I know I have a high chance of breaking the low. So whichever, it's the opposite. So whichever one forms first, the other side is the one you should break. So let's go back to today because this was a very key spot. I was on stream this morning. I called this out. So let's look at this right here. Let me zoom in a little bit. Our IB high, this is the high. It formed first. You see the candle came up here and formed first. The IB low formed second. So the reason why I want to know this information is because I know, okay, if the high forms first, it's 65% of the time we're going to break the low. So once again, this formed first, this formed second. So as we bounced here, I'm looking to short because I know price action, trend are down, right? Trend is down, trend is down. So once we form this, I know we have a high probability of breaking this, 65% of chance from this angle. And then remember the stats I told you earlier. So you can combine the two stats. You can combine 65 and you can also combine the, what do you want to call it? You can combine the normal stats, which is just, hey, we're going to break one side 97% of the time. And we're only going to break one side of that 84% of the time. You can combine that with, hey, now that I know which side formed first up here, boom, I know that this is probably going to form, that this forms first. I know this forms second, so we're probably going to break it. That's all in confluence. Plus, you see, we came right back to that 25%. So that was the most common place where it goes to once it fills. So that's another piece of this too, right? And let's say the low formed first. So let me see if I can find a day where that happened because the first break, that's 78%. That is a strong probability here. Let me find one where the low formed first. We haven't had too many of these lately because of the market. Yeah, I don't even know if we've had one of these in a while. Maybe back here. Was this the crazy news day? Of course it was. And let's see. I just eyeball this because this is far enough back. All right. So here's our first hour from this candle back to here. So here our low formed first, our high formed second. So I know with a 78% probability, since this is my low and this is my high, this forms second, I know that at some point we have a 78% chance of this happening. 78 right there. I wish I could find a better example. It's just been such a long time since we've had the something good like this form. Yeah, pretty much all of these look. And just look at the pattern here, guys. IB high formed here, IB low formed here. This one was first, this one was second. Which side did we break? Boom. There's 65% of the time happening. This one right here, we ended up breaking both. This was a wild day. Now this, once again, We had you have news, you have, I mean, the data takes into account all the news. This day we did have the high form first, the low form second. We did break this, and we fell back, and look, we ended up breaking both sides, double break. Now remember, once we broke this was actually low probability of happening. However, we did, right? So when I say 13% chance or probability, 13% of the time something happens, here's one of your 13% of the times. And it was that was a wild day, right? Here, once again, we broke both sides. This was only a 13% chance. We got rejected really hard up here. But once again, high formed first, low formed second. First thing to break was the low right there. Here's the statistics on that. High formed first. This is what's happening a lot right now. So I'll just stick on this. So high formed first, that means there's 65% chance that the low is going to break next. So once again, high formed first, low formed second here. What broke? Right there. Low broke. And then obviously today, same thing. We already went over this. I'm not going to beat a dead horse here, but boom, boom. And the low broke first. High, low, low broke first. All right. There's one other piece that we can look at on here, and it's by levels. Let me find it real fast. What is the performance? It's got to be by the levels here. This is only showing me breakout though. Oh, here we go. I'm gonna go to breakdown days. All right, I figured it out. I was like, why is it not showing me the other half of my data? Let me go down here and save. All right. So what does this one do? So there's a little bonus piece for you. All right, now if you see over here on the right side, you see how this is the zero line up here, right there, and this is the zero line? It's because this is IV high, this is IV low, and then what it does is that actually marks, okay, here is half of this range. So if we take, this range right here, what we had that first hour, so basically this distance, and we add it again, there it is. And the reason I add that is because here's one standard deviation. So whatever side this is, from 0 to -1, and obviously from 0 to +1, it's going to be the same standard deviation or the same size as this. So it's like one full move here down to here. So either way that you want to describe it, that's what it is. And the reason I bring this up is because you can actually look at data on this. So once you break down, so for example, once we broke down here, this 0.5 minus 0.5, you hit that 64% of the time when you break down. So more times than not, that's how far you go when you break down. And then 31% of the time, you actually make it to this next level. So 31% of the time, you get to here. Why do I want to know that? Because look how small these odds get if you get like to 1.5, 17%. Let's see. I don't even know if we've gotten that far here. Let me add it on here just so we can see it. All right, so there's -1.5. Like on this day here, which this was a wild day anyway, but I don't know. You see some reactions right on. That's the minus. This is -0.5. This is -1. This is -1.5. Look where we just randomly bounced at. How strange is this that this happens this way, right? So if you look at this, even after hours, look where this bounce point is. Why is there a red line here? Because that's one standard deviation from the initial bounce from the first hour. Look at all this chop right here. So here's your low, here's your 0 point, here's your minus 0.5. So obviously this is a major target. This is what I use. You can use it on the upside too for breakouts if you're looking on the upside. Obviously same thought process there, but you can actually quantify how often you get to certain areas. We're absolutely ripping on the market right now, by the way. I have no idea what's going on. But I may have to. Well, I don't even know if I want to short this thing if there's some kind of news out. Hold on, we got news while we're on live stream. What's going on here? Anybody got that? I'm over here trying to teach. We got news coming out or something. New SEC chair. That's the only thing I see. We just absolutely ripped here. Look at this. Right into a short zone. All right, well, sorry about that, guy. I got distracted because I started seeing candles flying up my screen over here. Look at this. What are we doing? Wow. All right. If you have any questions, throw them in. I do want to hit another piece of data here in a second. All of this is pretty much everything I've gone over. Actually, everything I've gone over is within this report right here. So if you're on Edgeful, go to reports. I'm on QQQ. SPY's the same thing, right? Same data, pretty much the same strong statistics you see there. Look, if you break out on SPY, look, that's 81% of the time you're going to go to that 0.5. That means on SPY, when you break, which we did right here, boom, right there. And then look where price kind of gets stuck right here. That's interesting. Look where price bottomed today. Here's your SPY. So here's the example. 47% of the time, when you break down, 47% of the time you come through this, you're going to go to this level down here, which is one standard deviation, right? So it's this size doubled one more time. Boom. And look exactly where we bought up on SPY today. Exactly. Look, double bottom off of that level. So definitely interested. Did y'all figure out the news for me? There we go. Oh man, B Plus has got it. Is Bitcoin going crazy? Because we got a bonus stream. I just shorted NQ, by the way, if anybody cares. Is crypto going crazy right now? Not really. You the pro crypto guy? I don't know. Anyways, back to it. Okay. Yeah, we're right at the early open for the Asia session as well. What is it? 8 Eastern. All right, guys. So that's the main thing. Look at this. Just for the example here on SPY, there's your IB. Okay. So if you're on Edgeful, any stock that you guys trade as well, you can get these same statistics. So if you're a day trader, and you're trading Tesla, if you're trading Nvidia, if you're trading whatever, doesn't matter. Excuse me, doesn't matter. The ticker is in here. Look at all these tickers. Boom, all those tickers are there. All right, so under choose report, it's just called initial balance breakout. I use 6 months of data. To me, that's the best. And then you can go standard. Look, you can even go by weekday if you want to see what the stats are by weekday. How much do they change, right? Let's see. Look at that. Tuesdays, it always is breaking. Look at this. Wow. Thursdays has a higher chance of double break. That's very interesting. So that's an outlier to me. So on Thursday, you could actually look for both sides to break. Very interesting. Monday, you rarely get both sides to break. Huh. So you can get really granular with this data too. If you're really wanting to like hone in and pack things together and see, okay, what makes the most sense here? Data does change over time. So I saw this question here, and let me go through. I'm going to make sure I'm going to sweep this chat real fast to make sure I don't miss anything. Data does change over time. So I use 6 months of data, and that's always changing, right? The data right now, especially, is very, very different than it was 3 months ago before we got into this volatile market, right? Some of these data are a lot stronger, and some of them are not near as strong. I know like some of the gap fill reports are much different now than they were 4 or 5 months ago. So I usually use 6 months of data. You can see I have it set over here to 6 months. You can do anything you want. If you want to go down to 3 months, if you want to go for a full year or 2 years, kind of depends on your scenario. I think 6 months of data is a sweet spot just for me personally, because that tells me, okay, here's kind of the general behavior of the market, and it's going to include. So I don't have anything skewed that's like, okay, well, the last month or two, like maybe we had some outliers, but it's not going back and taking data from 2 years ago where maybe things were much different, right? So that's kind of my general thought process on why I use 6 months of data. Um, I appreciate it. B plus, you're the man. Appreciate you. Shout out to you. Let's see. Let me make sure I haven't missed any questions in here. That was an insane bounce at 3 p.m. It was absolutely insane. I wasn't a part of it. I closed out everything. Right down here, I closed out everything. I did not get any of this action, but hey, it's okay. We survive in advance, but made all of our money. All right, here, let me go back to QQQ, and I can talk about today's trade real fast. Let me turn these drawings back on. So I was live on stream, and you can see this right here. I drew this when we were right here. I drew this right here, right? So I had this level down here anyway. This was a previous low. And I said, okay, look, we've moved down. Everything's bearish. I expect this to push down a little bit further, make our IB low, bounce back to this area. And even if it came to this area, I was willing to try a short here again. But I was willing to go ahead and short here. We had this kind of consolidation here. And you see right here, we had this consolidation. We came back to that same area. And I was willing to short it here because I knew the IB high formed first, the low formed second. So I had a high chance of breaking here. Also, I know that we're going to break at least one side. Price action is trending down, right? Bearish, trending down. So I'm looking for a break of the IB low, which we came right back down to it. Basically, I drew this because I said, okay, we're probably going to form the IB low. We'll bounce back up a little bit. We'll come back down and do one of these little, like, get back down close to it, hit, push back up, maybe hit this area right here. And we did. And then boom, we broke and we just rode it. And look, we didn't even come back to like get back in a second time. Let me go to ES here. ES, I was short from the open and I was able to hold until this happened once this broke. So like I knew right here, ES had broke and NQ and QQQ had not broken yet. So you could have reshorted that knowing that QQQ is probably going to play out the same pattern, right? So that was another thing to think about. I do got to jump off here and go get on Frank's space here very soon. But yeah, here's the main idea. And I'm going to throw in a bonus before I close this out here. I know I've been going about 35 minutes. I'm going to throw in a bonus that goes with the first hour of trading. So the IB first hour of trading, super important, right? There's one more piece of data that I want you guys to look at when you look at the first hour. Opening candle continuation. This right here, and let me make sure I am on 60 minutes. Okay, if the first hour of the market is red, there is a 70% chance you're going to have a red day on SPY. Let me throw up the same stats for QQQ. If the first hour of the market is red on QQQ, which that looks like this right here. Let me turn those drawings back off. So our first hour of the market. So from where you open, which here's our actually right here, this is our opening print. This is where we closed the first hour. So that's a red candle, right? We were red on that first hour. The reason I bring that up is because there's a 76% chance on QQQ that you have a red day if that first hour is red. Look at the opposite, 80% green if you have a green first hour. So if we opened here, even if we do like this right here, it doesn't matter. But if you close here at the end of the first hour above where you open, so if you open here, it doesn't matter what happens in between, and you close that first hour here, that's an 80% chance that you're going to have a green day. Now, where was a green day out today or a red day? Obviously, it was all the way up here. This is where you had to close to get green. Once I saw this entire area was out of the picture for me because it's only a 20, less than a 23% chance that we were going to come close green up here. All right, so this right here, I'm not looking at hourly candles. I'm looking at the first hour of the market, right? So big difference there because if you have an hourly candle that's from 8 to 9, 9 to 10, 10 to 11, you know what I mean? That is not something that I want to be a part of personally. It just to me that doesn't matter because I know that I have strong statistics for from 9:30. So I just think about it as the first hour of the market. I don't care about the actual candle as much as the first hour of the market where we open and where we close, right? And then also the high of that first hour, the low of that first hour. That's all I care about right there. All right, guys. I do have to jump off of here. I hope this was super helpful. I know for a fact, like today, this trade was absolutely amazing. I drew it out, and then I was able to just ride this and ride this and ride these runners as low as I wanted to go, um, from being short from right here. And I took this short with confidence, with multiple data points telling me that we were going to break the low. Plus, I knew that ES and SPY had already done it. They did it right here. So I figured QQQ is going to catch up, NQ and QQQ is going to catch up, and we're going to come down and break through this. And I'm going to take trims here, and I'm going to let runners go wherever they can go, right? And as you can see, even where I shorted, we never even got back to that. We never even made it back to that high. So, all right. Last thing, if you haven't tried Edgeful yet, there it is right there in the chat. I don't know. Can I put it in the Twitter chat? Let me try to put it in the Twitter chat. 1 second. 1 second. I'm like an Inception here watching myself. All right, there it is in the chat for both Twitter and YouTube. All right, if you guys missed any of this, you can watch it back at any time. But definitely check out Edgeful. Give them a shot. Give it a month, right? Give it 30 days. You get all these indicators. So like gap fill, I've done plenty of videos. Go through my YouTube, check out some of the other videos I have on there. I think I'm gonna probably do another trade review video very soon. These indicators by themselves are amazing. And there's multiple things, reports that I've talked about. When you're below a previous day's low, above a previous day's high, if you break either one of those, there's strong data points with those. So you see I have that indicator for my chart. All the time, actually. I know that stays on. Look, even on this previous day's low, you see it on my other chart setup over here. I have that on here all the time. All right, guys, I gotta jump on that space with my man Frank and some of my other friends, some great traders of mine over there, see what's going on, and hope you guys found this helpful. If you have any thoughts, any questions, drop them in the comments, shoot me a DM, whatever you can do to get it to me, and I will do my best to get back to you one way or another. Or if you have an idea, if you've heard me say something on Spaces or on stream that you want me to do a little bit deeper dive into, let me know. Let me know, and I'll definitely check it out. Maybe I do a video on that next, or a little live stream on that. All right, guys, I'm out. Hope you have a great rest of your Monday. We'll see you guys